Good evening, friends. Hope you all are well and doing fine. Thanks for joining this webinar to discuss our NFO of HDFC Pharma and Healthcare Fund. With me on this call are Chirag Satalwad, our head equities, Nikhil Mathur, the fund manager for this fund, and Ram, my colleague, who will help me moderate this call. Before I invite Chirag, just a few words on the fund. Pharma as a subject, as an industry, is known to all. It is like part of our life. Everybody, in some form or the other, consumes medicines and requires other services related to pharma. Uh, when it comes to pharma, it is a subject which is central to government across the world. Today, world population must be roughly 7 billion people, and all governments have to the central theme to take care, rather take care of the health of their citizens. And it is more particularly evident after the pandemic COVID that started in March 20. And of course, India was at forefront while dealing with this COVID. They already supplied free vaccine to all to its citizens, but also to the citizens of the global south. More particularly, if you think about healthcare as a subject, Prime Minister has announced Ayush Bharat, in which they provided sort of a subsidized healthcare facility up to 5 lakh rupees to people below certain income levels. So in India also, and as I said, world over, the subject of pharma is very central to all the governments, and therefore we see a sort of a structural growth in this industry as far as demand side is concerned. So, without much ado, as I said, we have Chirag, our head of equities, who would like to just say a few words about this industry. And thereafter, we will invite Nikhil Mathur to take over. So, with this, Chirag, over to you.
Great, Ashok. Thank you. Am I audible?
Yeah, perfectly.
Can you hear me?
Yes.
Great, fantastic. So thank you everybody for taking the time to hear us on our upcoming NFO of the Healthcare Fund. I just wanted to spend a few minutes to just introduce the fund, and I will let Nikhil take it on post that. But I truly feel that the pharma opportunity over the next decade is an extremely vibrant and interesting one. And I think there are two, three, four reasons for this. So let me just highlight that. One is, of course, the Indian context. Indian pharma market continues to grow at between 10 to 12%. And considering the penetration of products, the growth in the population, and the growth in chronic diseases, I think this growth will persist for several years to come. So the outlook from growth from an India standpoint continues to be very encouraging and looks like it is sustainable going forward. On the other hand, I think Indian pharma companies have achieved global scale from an R&D perspective, from a manufacturing perspective, and today export to countries all over the world, and especially the US, which is a large market for Indian pharma products. And in the US, we are seeing a material improvement in pricing. Price erosion, which used to run at 5 to 7%, seems to be moderating to some extent, and there are emerging shortages in the US as well. Um, so I think both the domestic market as well as the global market, especially the US, seem to be encouraging. But I think what is more important than that is that Indian companies have achieved a lot of competency and skill in the overall pharma arena. And these are companies with good growth prospects, good ROCs, good cash flows. And hence, investing in this space should prove to be rewarding over a period of time. I think the other point to keep in mind is this is a complex space, not easy to understand, and therefore it is well suited for a mutual fund framework. And the last point I will just put in place is while it is a pharma and healthcare theme, it is quite diversified because within this overall theme, you have domestically oriented businesses. You have businesses which are a mix of India and outside of India. You have a mix. You have also diagnostic businesses. You have hospitals as well. So I think it's a very interesting opportunity because it is well diversified across a number of subsectors. India is doing well. Currently, US seems to be improving as well. It's a complex space, well attuned for mutual fund investments. And I think Nikhil has done a fantastic job already in helping all our other products choosing the right investments in pharma. And I'm sure he'll do a fantastic job with this fund as well. So with that, I'll hand it over to Nikhil to take it forward. Thank you, everybody.
Sure. Good evening,
Thanks,
everyone.
Chirag. Yeah, over to you, Nikhil.
Yep. Sure. Good evening, everyone. Thank you, Chirag. Thank you, Ashok. Thank you, Ram, for introducing me and this fund. So I think the way I'll structure this presentation is I have a slide. I'll just share my screen. So I think first and foremost, Chirag, I think, touched upon a lot of aspects which are relevant to this particular fund. So what I'll do is I'll give a 5-point summary on why someone should be looking at this particular fund. And I think what I'll do is, while the entire presentation is a 30-35 slider, but I don't think that we need to go through every slide in detail. Based on those 5 points that I'll be mentioning, I'll highlight the relevant data points, the relevant charts, to kind of give a perspective on what we are looking at when we are evaluating this particular fund. So diving straight into this presentation, so I think the way I would like to structure this presentation is we need to be mindful of 5 points when we're trying to evaluate this particular fund. I think 3 are fundamental. One is slightly on valuation, and the 5th one would be risks. I think risks are pretty important in this particular space. I think so. I'll spend some time on that as well. As far as the first 3 points are concerned, which are more fundamental in nature, why one should be looking at healthcare and pharma space in India from a longer term perspective is there is a domestic pharma opportunity, which I think Chirag articulated really well. Along with this, there is a full healthcare services segment as well, which has emerged as a big growth driver for the entire segment over the last 5-6 years. So I think hospitals, retail pharmacies, diagnostics are well captured by healthcare services, and that's a higher growth area that we see kind of opportunities in. And the third important piece is, I think, the exports opportunity. India is categorized as pharmacy of the world. This was re-established during COVID times, the way Indian companies contributed to not just vaccines, but also various drugs that were consumed during COVID in that point in time. I think that has set the foundation for the next leg of growth in the exports market. So I think keeping these 3 basic points in mind, I'll walk you through this presentation, and then I'll spend some time on valuations as well as on the risks that are involved in this particular sector. So this scheme is essentially a play on 2 fundamental factors and 1 enabling factor. We have the domestic story. In domestic, intuitively and basis data as well, we can kind of figure out that there is penetration that is yet to happen. There's a lot of penetration uptake that the country will see in the coming decade. While we are a young population and we will continue to be a young population amongst all the major economies, but I think the share of elderly population will steadily increase. Nothing very disruptive in terms of the percentage share that will change here, but I think the number of people adding to, let's say, plus 60 or plus 70 years bracket in the coming 5 years is kind of big. I mean, we are talking about population in the range of 3 to 4 crores and kind of aging. So that I think should drive a lot of healthcare spend. And there are a lot of disease pattern changes happening. There is rural penetration that's happening. So I think that's also a lever that one has to kind of be cognizant about when looking at this space. On the export side, there are patent expiries. We all know, we have all heard of the word generic. I think there's a lot of opportunity on store in the coming 5 years. Indian companies are now gaining ground with many complex products, which till now wasn't happening. And outsourcing as a theme by global companies is also a big trend, with many companies having latched onto. And I think we'll see a lot of more growth happening in this particular segment as well. And as far as the enabling factors for these 2 opportunities kind of stand, we have the PLI scheme from the government. I'll talk about a case study why that's important. We have the labor cost advantage, quite intuitive, but I think it's visible in data as to we are amongst the lowest cost producers amongst various emerging economies. And India has a 2.5 decades of rich history of doing R&D. We have a number of scientists. I kind of look at this as the IT way of doing things, where we have the right soft skills in this country, which kinds of enables us to launch so many products globally. So I'll walk you through some interesting charts. This is a broad landscape, what we are looking at when basis this fund or the investable universe. Entire universe is split into two broad categories, pharma and healthcare services. Pharma includes domestic formulations. We have exports. There are multiple segments within exports. I'll talk about that. And then there is a contract opportunity, which is at times abbreviated as CDMO. And in healthcare services, we have diagnostics, hospitals, and a new emerging space, retail pharmacy. A bit like DMart and FMCG, we also have a couple of listed names which are there in the listed pharmacy space as well. So the domestic story is all about the domestic spend increasing. There are some charts here. I'll highlight 2 points here. India's healthcare to GDP spend is amongst the lowest, and it hasn't changed a lot in the last few years. While there's a lot to desire from the government as to this percentage to GDP ratio should trend up. But what's interesting is that within the private consumption basket of a household, the share of healthcare spending has increased. Roughly 10 years back, this if let's say a household is spending 100 rupees, 3.6, 3.7 rupees was going into healthcare requirements. Now it is at around 4.6, 4.7 rupees. So we have seen quite a sharp jump in the last decade in terms of healthcare spend in a private household. And one interesting chart here is that the polarization between availability of services and drugs versus the population base. If you look at the population of this country, 66% of the population resides in tier 3 and beyond cities. But if you look at the penetration of hospitals, pharmacies, specialists, it is nowhere close to the level of population that is represented by the rural areas. So I think these two factors are the macro drivers for this particular segment for domestic healthcare. And specifically, what's happening in the country is that the number of diseases which can be categorized as chronic or repeat, such as, I mean, everyone would have heard cardiovascular issues, diabetic issues, they have gone up in the ailment pie in the last decade or so. What this leads to a repeat demand kind of a scenario. So the demand is more predictable if these kind of ailments kind of gain share in the pie. Not to paint a grim picture here that we are getting more ill or diseases are kind of burdening the country. If you look at the right-hand chart, which talks about life expectancy in India or rising longevity, we are seeing that in last 70 years, the lifespan in the country has gone up dramatically from late 40 kind of expectancy. We are at somewhere around close to 70 years. So I think while the chronic diseases have increased, but at the same time, we have a increasing lifespan as well. So I think that's an indication of the value addition that pharma or drugs are doing to our daily lives. And finally, as I discussed, elderly population is increasing. So currently, we are at around 8-9% of population which is above 60 years of age, and this should go to around 13% in the next 5 years by 2026. And we are talking only 60 plus years of age. I mean, there are ailments, there are episodes of hospitalization even in the 40 to 60 year age group as well. So nothing to be alarmed about here again, but it's just that the pool that will consume healthcare requirements will kind of increase in the coming years. And finally, I think one big trend which is kind of driving this entire landscape is the insurance coverage. In FY22, the total lives covered, which is only private and corporate, I'm excluding the government insurance here, is 21 crores. This number has almost doubled in a matter of 5-6 years. And the claims processed over 16 to 21 is around 16% CAGR. I think these numbers are pretty telling in terms of the advancement of healthcare in the country and how people are taking their lives so seriously that more and more enrollments are happening in the insurance side. Domestic pharma or formulations, as we also call it. I talked about the broad themes impacting domestic, our India story, and now I'll talk about certain segments in specific. Pharma has grown at a rate of around 10-11% in the last 10 years. I see no reason why this growth trajectory should come down. I believe that 10-11% is doable in the coming years as well. And I think the levers for this would be there's a lot of penetration that's yet to happen. So volume growth will be there. Within the ambit of regulations, companies are allowed to take certain price hikes. It is heavily controlled by the government. But still, because of inflation, there is a level of price hikes that companies are able to pass on an annual basis. And then there is new product launches as well. As per capita grows in the country, we'll have more and more affordability of many products which are consumed globally, which have not yet been introduced in India. So as those products come into India, that will also be a growth driver. So all in all, it's a growth which is driven by all three levers: volume, pricing, and new products. Some charts here on talking about what's happening in the market. Like I said before, the chronic diseases are going up in the pie. So that is kind of represented in the consumption pattern as well. Chronic diseases, which are more repeat order related, they are going up steadily. And also we see the rural share kind of increasing in the last 5-6 years or so. So I think these are two growth drivers which get backed by the data that we can see on this particular slide. There's a recent study which was done by ICMR. This is a very authentic data that we have from that report. The report talks about existing diabetics population in the country being 11 crore, and pre-diabetics are almost 13.5 crores. So I think diabetes is pretty prevalent. Unfortunately, the diabetes is pretty prevalent in the country. That should see quite a bit of increase in patient population in the coming 5-7 years or so. But there are medications to target this kind of issue that the country will face, and hence I think we can see increased consumption of many products which are targeting the more chronic and lifestyle diseases. Then we talk about healthcare services. I club hospitals, diagnostics, and retail in this particular segment. We have all heard of leading pharma companies, leading pharma listed companies. While we do know names of various hospitals as well, various listed hospital companies. But pharma as a listed universe is much larger than the hospital space. And a counterintuitive data point is that hospitals actually has the largest market size in the overall healthcare space. So we are talking about a market size of almost 5.5 to 6 lakh crores for hospitals versus 2.5 to 2.7 lakh crore for pharma. Because of so much of government presence in hospitals, the addressable opportunity on the private side is much lower than what it gets visualized based on the overall market size. But nevertheless, I think more than pharma, I believe there is more of underpenetration that's in healthcare services. And that's what I think this sector or this industry will realize in the coming 5-6 years. Some data here, we have the lowest bed population when we compare with many other countries. We have 15 beds per 10,000 population. Thailand is at 21, Vietnam is at 26. So I think there's a lot of leg room there. The growth has been in the range 10-12% in the past. That should continue. An interesting point here, Indian medical tourism, the number of foreigners that are get treated in India is growing very sharply. Pre-COVID, the annual growth in footfalls of foreign tourists coming to India for medical requirements was growing at 30%. Base was low. The base is a bit bigger now, but I think it's nowhere close to what the companies are trying to get to. Even the government's Heal in India initiative is a step towards this initiative, and I think that's going to be a big driver or portray India as a big healthcare destination for the global population. Diagnostics and retail pharmacy, I think the common element between both the themes is that there is a lot of unorganized to organized shift that has to happen. Out of the total out of hospitals market, 73% of total diagnostics requirement are met by labs which are not well known, which are very localized, or which also border on being called low quality labs. Pan India chains are gaining volume share, which we can see from the bottom rightmost chart. And I think this trend is to continue for the 5-6 years. So I think we have a very high probability of the listed big chains kind of outpacing the overall market growth. Same in retail pharmacy. Historically, India has relied on neighborhood pharmacy stores for their requirement of medicines. But I think certain things are changing in this landscape. A prevalence of discounting, margins some coming under pressure is leading to some sort of consolidation. And we see certain large online and offline players which are gaining market share. So I think even in retail pharmacy, there's a lot of penetration that has to happen for modern retail, and the country will witness this in the coming decade or so. So this was all about domestic pharma. Quickly, I will run you through what exports opportunities Indian companies have in the coming 5-6 years. So there are three broad segments. I'm sure many of us know about these segments or know about these technical terms, but I'll just give a quick brief on what these terms mean. So we have generics. Any drug that is sold by Indian companies globally has gone off patent, and if a drug goes off patent, that means it is called a generic. That's a simple definition of a generic medicine. Biosimilars. Historically, drugs are manufactured from chemicals, but increasingly advancement in medicine technology is ensuring that there are more new class of drugs that are emerging, which is manufactured from living organisms, from bacteria, yeast. Those drugs are called biologics, and the generic equivalent of biologics is called a biosimilar. So biosimilar is in simple terms, is a generic copy of a biologic, but it's not a chemical molecule. It's made from living organisms. And the final segment is the contract opportunity. Contract opportunity is abbreviated usually as CDMO, which is called contract development and manufacturing. It's not just manufacturing, it includes development, discovery, R&D, many things as well. Hence, it's called CDMO. The Indian US generic listed space has been under pressure for the last 5-6 years. But I'll show some interesting data point. In the US, almost 1.5% of GDP gets saved from generic medicines and biosimilars. Now imagine US is a $20 trillion economy. So almost $300 billion of savings that economy generates from these generic and biosimilar drugs. I think if Indian companies were not there, I simply don't know how the US would be meeting its requirement of medicines. So I think it's a very strong business case, though obviously it has its own cycles of higher pricing erosion, lower pricing erosion. There are many challenges. US FDA, we all hear about some inspection or other happening. But if I keep all those aspects aside, it's an industry that cannot be ignored either by the Indian companies from allocating capital or from the US regulator or from US FDA as well. So I think that's a strong business case for the industry, and overall growth is in the range 5 to 6%. On the specialty generic side, which are more complex areas, which Indian companies are now targeting, the growth is around 12%. So I think a lesser growth is on offer, but there is still some growth that is on offer in the global markets. Indian companies have done phenomenally well, given that the global market is lower growing. Indian exports have grown at a CAGR of 8%, and we are now sitting at a market share of 48%. This market share was 32% in the US 6-7 years back, and we are at 48% now. I think it shows the indispensability of Indian companies in the US market. And also, like I said, that US has its own cycles. It's a bit like commodity, where there are periods where there will be extreme pain, then there will be extreme euphoria. We have to be careful a bit where we are in the cycle. I think over the years, we can get some sense on tracking some data points as to where we are in the cycle. So if I look at the opportunities in the coming 5 years, the molecules that are going off patent is almost 3 times the molecules which went off patent in the last 5 years. So there's a natural higher addressable market size in the coming 4-5 years. So that's an interesting data point at this juncture. And secondly, in the past 8-9 months or so, due to inflation, a lot of issues have come up. Many global companies have gone bankrupt. And also US FDA has picked up the inspection rate. So there are a lot of compliance actions issues happening at various companies. So that is leading to an abnormal shortage situation in the US, and hence the pricing environment is much better than what it was 9 months back or 12 months back. So I think these are two data points which kind of indicates that while the pain has been pretty strong in the last 3-4 years, barring 1 year, but I think things are looking a bit better than what they were looking 4-5 years back. Just a simple chart to kind of explain the biologics opportunity. 20 years back, there was only one drug amongst the global top drugs, which was a biologic. And today there are 5 drugs amongst the top 10 drugs, which are biologics. So companies have to pivot towards a non-chemical based portfolio as well. And we see certain Indian companies making rapid strides here. Contract outsourcing. The point I'd like to highlight here is that a drug development from an innovation side takes at least 8-12 years to develop. There are many phases from discovery to development to trials to commercialization, and there are massive costs involved in a drug development. So this creates a lot of risks. And to de-risk, many global companies outsource part or full a lot of these activities. It could be discovery, it could be development, it could be commercial manufacturing. So I think this is the opportunity here. It's a multi-billion, the total opportunity is more than $60-70 billion. We are barely scratching the surface at this point in time. And hence, this is an interesting opportunity to be present in for Indian companies. A small case study here, we have profiled 3 companies. Company A is a pure play CDMO company. It has grown at a CAGR of 19% in the last 10 years. It also runs dedicated centers for global big pharma, a bit like how the IT services works. Company B operates in contract manufacturing and API segment. It is a high revenue based company, and still it has recorded a 12% revenue CAGR in the last 8 years. I think that's kind of pretty attractive growth. And the company C, its CDMO share of revenue was less than 5% 10 years back. It's now more than 20%. So I think this is quite great evidence to suggest that the companies are addressing this market very aggressively. And some 2-3 charts, I'm sure most of us are aware, but I'll just reiterate some of the enabling factors that are there for the Indian healthcare. We have the second highest share of US FDA approved facilities. We have a great advantage in terms of low labor costs versus many of the emerging economies now. And the government's PLI scheme. I don't think I can stress enough on this particular scheme on how that can change the ecosystem that the Indian pharma operates in. I'll just take one example or one case study for the PLI. We have all consumed antibiotics at some point in time. You'll be surprised to hear that the entire antibiotic API supplies come from China, not just for India, but globally. Look at the risks that we are sitting at today if a country doesn't move away entirely from China. So I think this is where the Indian government's vision has come to fore, where they offered a PLI for these class of antibiotics. And we have a large listed company which is investing almost $235 million, which is almost 30% of global capacity. So I think this initiative not only secures India from a risk standpoint, but also from a listed company standpoint. It opens a new avenue of growth, new avenue of improving their margins, which I think can improve the further improve the competitiveness of the country at the global scale. We have a ready pharma R&D pool that is unparalleled. Indian companies have consistently spent 5 to 9% of revenue on R&D in the last couple of decades. And the result is, since 2005, we have the highest number of approvals in the US. And a generic approval in US is abbreviated by a term called ANDA or ANDA. And the data that we track, we see that it is the highest since 2005. So I think to round off my 3 points, we have a steady domestic pharma opportunity. It has grown by 10-11%. It should continue to grow. We have a evolving and faster growing healthcare services space. Hospitals is actually larger market size than pharma. So I think we are barely scratching the surface there. With insurance penetration, that will pick up. And third is in exports, we have the capability. We have demonstrated that capability. Our manufacturing prowess was amply visible during the COVID times. And I think this will only grow further from strength to strength. So keeping all these fundamental aspects in mind, I think the growth outlook for Indian pharma the coming 3 to 5 years looks very promising. Like I said, 3 fundamental points, one on valuations and one on risk, and then I'll kind of sum up my presentation. Valuations, BSE Healthcare is the index for this particular fund. So when we track the healthcare index itself relative to its history, it is currently trading at a 14% premium to its 10-year historical average. When I exclude hospitals, so hospitals has had a very sharp run up in the last couple of years. This premium slightly comes down to almost 12-13%. I don't think this is overly expensive. And when I compare this valuation to the broader Sensex, the premium is 15%. And historically in the past, in 2014, 15, 16, the premium has been as high as 25, 30, 35% as well. So I don't deny that the valuation is slightly on the higher end for the index, but so is for the market. So I think on a relative basis, the valuations look much better. And today we are at a juncture where earnings outlook for the domestic growth is as strong as it was in the last 5-6 years. And on the global generics pricing side, things can't go any worse. So that naturally means the outlook is better than it was a year back, or 3 years back, or 4 years back. So given this context, I think the valuations are fairly reasonable. And another point I'd like to highlight is that there are multitude of opportunities that are available to invest in the pharma space. It's not a very concentrated index. The largest company has 16% share in the index. And all other companies have a sub 8, sub 7% kind of a share in the index. And there are at least 40-50 companies in the index out of total 99, which have a share of less than 1.5-2%. So it's not a very concentrated index. That throws up a lot of opportunities in different segments. I've tried to give some sense on how allocation is very important in this particular segment. If we talk about 4 broad segments, one is the API CDMO space, second is domestic heavy companies, third is generics, and the fourth is healthcare services. The companies tend to outperform at different points in time. The secular growth has been witnessed in secular share price returns have been more in domestic pharma side and API and healthcare services, whereas generics have out of last 6 years have given phenomenal returns in 2 years. So I think catching hold of the generic cycle is important, which we'll try to, and taking structural view on API, domestic and healthcare services is what we'll try to do. So we'll have a good diversified portfolio with reasonable active weights on companies in which we feel the earnings growth will be pretty strong, and that's how I think we'll endeavor to generate unit holder returns. And finally, on risks and how those risks are getting mitigated, I think there are 3 major risks that any pharma company kind of is exposed to. One is the US FDA risk. I'm sure as soon as we read something in CNBC or look on CNBC, so and so company has been inspected by US FDA. So many observations have come, and there is a negative perception that's built around that. I think the Indian pharmaceutical space has evolved in the last 10 years or so. I don't deny that US FDA inspections or adverse outcomes won't be there. They will be there. That's part and parcel of the sector now. But the companies have evolved their strategies. Today, companies are no longer dependent on just 1 or 2 plants, or they are no longer dependent on just 1 or 2 products, or even for that matter, geography. So today, companies have multiple plants. They do important drug filings for multiple plants. And they also have diversified into various other markets as well. It's not just the US, which is relevant now. You have the entire European market, Latin America, Middle East, Southeast Asia, Australia. So the focus on these markets is much more than what it used to be 8-10 years back. So the overall operating environment is much more de-risked. And the pricing regulations in India. Here also, I feel that there will always be risks. And the Indian government keeps coming up with a revised pricing list. But here also, the companies have learned to adapt. They have managed this risk pretty well in the last 6-7 years or so. Focus on products which are outside of price control. It can be various OTC products, consumer wellness products, unbranded generics. A lot of these areas companies have entered, and hence they're no longer dependent on just 1 or 2 products where pricing risk can come in. And also, I think in terms of product level concentration, I think this is a risk which is very important, and it's at times very company specific. So our endeavor will be to be on top of companies, try to figure out if they are running the risk of overexposure to 1 or 2 drugs, and then kind of take a call. So I think that's a risk which is more from an investment standpoint, which we have to be careful of. But there again, companies work with a much more broad portfolio, and hence over the years that risk has also come down. So I think risks are there. Risks will always be there in this particular space, but the mitigants are in place by various companies, and hence things should not be that bad if an adverse outcome kind of comes through. So yeah, I think that's about it. I think this is a summary of why one should look at the healthcare sector. Domestic healthcare spend will increase. Chronic diseases are increasing. We have seen the US market, the market share of Indian companies in the US, biosimilars, global innovation, and the manufacturing leadership that the sector enjoys. So I think hopefully this gave a good picture of what we endeavor to do with this particular scheme. I'll hand it over to Ashok and Ram on how to take this further.
Thank you, Nikhil. Thank you, viewers, on this call. Thank you, Ram. And we can close this call.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.